When you look at Queensland's 10-year infrastructure pipeline, it's in excess of $100 billion.
Wow.
And so there's a huge amount of spending. That could build you a high-speed rail at a federal level, that kind of money.
But isn't there an argument that...
What are your predictions for the next 1 to 2 years as far as the influences that are going to affect us in the biggest way?
At an accommodation level, ADRs run out of steam compared to 18 months ago. There was a really strong increase.
Absolutely.
So I think that will taper, but limited supply should see us continue to lift our occupancies, which will help on that RevPAR level to help with profitability overall.
Do you think property prices will continue to increase at the rate they have in the next couple of years?
Maybe not as fast. If the supply didn't really pick up quickly, that's going to be really challenging because...
Welcome to Checked In with Resort Brokers. I'm Frank.
And I'm Trudy. Join us as we explore the intricate world of the wider Australian accommodation industry.
We're going to walk you through the ever-evolving landscape of hotels, motels, caravan parks, management rights and the communities, but most importantly, the stories that underpin them all.
From market trends and expert predictions to the incredible personal stories and lessons learned, we're going to cover it all.
Join us as we navigate this amazing industry together. Well, good morning, everyone. Welcome back to Checked In with Resort Brokers. Very happy to be back. Trudy, Managing Director of Resort Brokers, is this an extension of our first season of Checked In with Resort
We're just
Brokers?
giving the fans what they want.
Season 2, starting with Season 2, coming back and giving the fans what they want. I love it. I'm very excited to be back with you. We've got a couple of fantastic guests this morning. First up, we've got our favourite property economist, not our only property economist, but definitely the smartest man in most of the rooms that we're in.
Well, exactly. He
Yeah.
actually doubles the IQ of every room he walks into normally.
That's right. Josh Mangleson, not only our in-house property economist here at Resort Brokers, but also head of Resort Brokers Research, which... Josh, please hold it up.
Yes,
our management
absolutely.
rights report was launched last week, which Josh had a very large hand in. And also the person that taught him everything we know we've heard, Associate Professor Connie Susilawati, Associate Professor at QUT at the School of Economics and Finance. I am not going to disrespect all your achievements, Connie, by explaining what you've done and the influence that you've had over the property industry. So, Trudy, I think I might just throw it over to these guys and let them explain what they do and how they know each other.
Absolutely, because I understand that Josh, she's taught you everything you know,
Yes.
but not everything that she knows, I imagine.
I'm not the smartest person in this room.
No. So tell us about yourself. We'd love to know.
Okay. Thank you for this opportunity to have a conversation. And I would really like to have this after we have the launch for the report, and then I have a chat with Josh. Josh is one of our property economics alumni. So I'm the course coordinator for Bachelor of Property Economics at QUT. I'm actually... will receive 20 years service recognition next month.
So you would have seen you've seen a lot happen, especially in Southeast Queensland within the property industry, right? You've been here for a full cycle and then some.
Or 2 or 3,
Yeah.
probably.
Yeah.
Yeah, so our property economics course was really growing very fast. We are now the biggest, or we have our biggest numbers of bachelor students in Australia.
Oh, wow.
So it's a really fast-growing course, and very proud of how our alumni actually grow and contribute to the society. Obviously, Josh Mangleson next to me, he got graduate quite a while ago, but since then, he achieved so much.
And you've done some work with the UDIA and various bodies within Southeast Queensland and nationally as well, haven't you?
Yeah. So I'm chairing the Property Council of Australia Past President Scholarship.
Wow.
But it's also I'm having this member of the UDIA Senior Living and Residential Care Committee.
Okay, interesting.
And membership director for Pacific Rim Real Estate Society, and an international body, but it's more like for academics and a little bit of industry. Then I also helping the Indonesian government with some of their research in the, I don't know whether you know that Indonesian government plan to move their capital city.
Oh, yes, I've
from
heard.
Jakarta.
It's because Jakarta is sinking?
Yes,
Is that correct? Yes.
So one of the reason is because of the climate change and everything else, but it's also the new place will be the center of the Indonesian, so it will be more reachable to few different places. But what our research was is related to the current Jakarta government building that going to be vacant or going to be, unused after they move. So that's part of our research. So we got a few, and then what happened, climate change also impact the flood. And the flood is not happened just in Australia. I just recently finished a project with Australian Indonesian government, looking at how to strengthen the flood resilience for vulnerable people in Surabaya, which is my hometown in Indonesia.
Well, shout out to all of our listeners in Surabaya and Jakarta. I hope that they're listening. However, if we can talk something a little closer to home within, Australia, and probably a bit more specifically within Southeast Queensland and Brisbane. Trudy, I think what we see every day in our role at Resort Brokers, we're hearing and we talk a lot about inflation, right, and CPI and some of the impacts that has on the property industry and specifically the accommodation industry as well. Trudy, we want to know what we're actually talking about, don't we?
Could you dumb it down
please?
For us?
Yes.
But I, if we had all the time in the world, I'd be very interested to understand what solutions or ideas there are around effectively flood mitigation.
It's a hot topic for Brisbane as well, right?
Also, I'd just be very interested because I wouldn't imagine without climate change slowing down, I wouldn't imagine there's that many options, really. But anyway, that's not what we're talking about today. That's another topic.
Future episode.
I would be fascinated to talk about it. Inflation's on the topic, front cover of the paper. They're leading the news, has been for some time. Would you dumb it down for us and explain to us what is inflation and why is it so dangerous for the economy long term?
So when we talk about inflation, the other, I guess, more technical name for it is the Consumer Price Index.
Yep.
And it's the movement in that index that we call inflation. So we compare one period, being the latest period, to 12 months ago and seeing how that moves.
Yep.
And that's what we call inflation. There are a number of different measures of inflation, which I'm sure we'll talk about momentarily. But effectively, the Australian Bureau of Statistics is the official measurer of inflation, and they assess the prices of tens and tens of thousands of goods on a regular basis that the average Australian household would consume, and weight those accordingly. So that can be anything from clothes to food to rent, transport, holidays, you name it, goes into CPI. And they're regularly taking all that price information and measuring it on what an average household might consume, and then looking at how that changes over time.
So how the price has gone up of all those things over a period of time.
And come down as well.
Yeah.
And come down, obviously.
Down.
Yeah.
Exactly.
Yeah.
And then also, I suppose, the trends of how we're all spending our money.
Yeah. Yep.
Which...
Correct. So within that basket of goods, obviously, over time, there'll be adjustments to how things are measured on the basis of how people do spend their money.
And so we've talked a lot about, we've seen over the last few years that it has risen a lot, Connie, and then it's also come back. We've been talking about a target of inflation. What are the numbers that we're actually looking at? What helps us as an economy? And also, we've also discussed one number versus another. This is not the number we're looking at. This is the number we're looking at, especially as our government's changed in Queensland here
And
recently.
the Reserve Banks.
And the Reserve Bank,
seems to be looking at a different
number
market
as well. So what are we as general consumers and being a little bit ignorant to the wider influences of the economy? What are we really looking at?
And what
if it impacts us?
What are the biggest moving pieces that affect the inflation that we're seeing at the moment?
Yeah, so it's very interesting as Josh says about the number of basket of goods and services that is actually there, that everything is moving up, and it's really hard for me to say what is the most influence, but I just give just a little bit of analogy that in other countries like Indonesia, we never talk so much about inflation as such because we know our inflation is really high. But people monitored really closely with the fuel price increase.
Okay.
Because when we talk
in
about,
Indonesia specifically, or here?
well, that's what the discussion in the community and everywhere. Because as soon as the fuel price rising, everything else impacted.
Because it affects transport.
That's correct.
Yeah, right. Okay.
So what basically, instead of we talking about inflation, that was the daily conversation in Indonesia about the fuel price. So that's going to be interesting because I got that will be something really big change in that country in the coming soon. But again, Josh, what do you think is from the data that you have a look, what sort of good or services that impacted that the most?
Yeah. Before I answer, I do think it's interesting you mentioned the idea of fuel being an interesting measure. If you go back even 25 years ago in Australia, there wasn't inflation targeting. It's a relatively new thing in terms of the history of Australia.
Right.
And so obviously by introducing it, we had to come up with ways to measure it. But you would have found that a conversation like what Connie's just mentioned would have been much more common 20 to 30 years ago. Because
you're talking about the real world impact of it rather than the measurement or the mechanics of it, how it
Like
works.
all our friends are saying how expensive groceries have got.
Yes.
Yeah.
You know?
Yeah.
Yes.
Yeah, and I guess inflation has just afforded us a specific way of measuring that. And again, it obviously impacts different people differently because, rents are in there, but mortgages look different to rents. And
Well, see, and I suppose in the property industry, inflation is a good thing because therefore CPI is higher and therefore the rent increases, which underpins the value of the freehold.
yeah, correct.
Well, and CPI works very viscerally into the management rights industry
exactly the
because
same.
that CPI impact has an impact every year, right, for your body corporate income, right, and which is rare. You don't often see that in a salary that goes up by CPI every year. I don't even know if politicians get that.
I think
I'm not giving anybody any ideas.
And I think it's interesting you mentioned that too, Frank, because, people can look at inflation as a number and say, oh, okay, well, that's, it's intangible. It's not a real thing. What does that actually mean? Which is where things like fuel become more of an interesting conversation point. But we do also have measures of wage price index at a public and a private level, and they've been lagging behind. And that's how we affect what we would see as real wages growth or real inflation.
I thought that there had been a real shift in the last
There certainly
12,
has been a
18
move up.
months, yes. Because there was real lag, wasn't there?
Yeah.
But it's been lost. Effectively, the gain that we've got has been lost due to the fact that everything else is outpacing.
Yeah.
the
So
pay
we'd be
increase.
quite happy 5 years ago very happy with 3% wage growth.
Yep.
But because inflation was sitting, at 4, 5, 6 and 7% over that period, it has been eroded in real terms.
And for many years, people weren't getting anything in lots of sectors.
Yeah.
were
Yeah.
they?
Wage growth was very low.
Exactly. So then the knock on, though, when I think of some of our clients who are running businesses, is the fact that if you've got a lease or, you're effectively paying more rent, you're paying more wages, right? And then you've also got a factor that the average guest doesn't have as much money to spend on weekends away or whatever it is. We've just come off the back of a domestic tourism boom. All of our clients have probably had the best 2 years of trade they've had in 25 years. So that could be a perfect storm. Although I'm very optimistic about the Australian economy. I think it's resilient, really. But what would your prediction be? Do you think that it's going to be tough for business owners for a period of time, or do you think that we're going to move through it quite quickly?
So again, as you mentioned really correctly, that the property and industry and everything else is lagging behind. So even if the target, whatever numbers this target is reached, it won't affect it straight away for the property. It's always lagging behind. So if we are lagging in terms of the response, we know that we will be lagging at the end. So inflation is always, we want inflation because in a good economy, we want some, it's like a carrot in front of us. Like if you don't have them, we're not going
Totally. And if you own a
it's
house,
stuck, yeah.
then your house value,
Yeah.
and you get capital gain and so on.
And before we sort of go for that impact, because inflation affects interest rates as well,
Yes,
doesn't it?
yeah.
So, but before we go onto that side of it and try and explore that and the impact that has for all of our industry and our listeners moving forward, can you explain to me the difference in why certain government and the RBA looks at inflation, looks at different numbers for inflation? Does that question make sense?
Yeah.
So the number that you'll often see bandied on the news is just the all groups CPI measure, which is just the national broadest, unadjusted, purest form of inflation that can be measured, which is helpful because it does encompass everything at a national level. But then when the RBA is talking about inflation, more specifically, more recently, because they're trying to get inflation under control using what we would call contractionary policy, so by increasing the cash rate to slow spending, we're seeing a measurement of what we would call core inflation, which is basically a medium-term measure. So when you look at CPI regularly in the all groups perspective, there are things in there that are volatile, that are seasonal, or that have big increases at the same time universally. So an example of something seasonal would be, fruit and veggies. Even accommodation, like we've got holiday peaks and troughs.
Absolutely.
And so they're what you'd call volatile items. Like 12 months ago, accommodation moved from -5% to 17% very quickly, you know.
Absolutely.
And then you've got one-off big chunky increases that would be felt annually by the economy, like education, for example.
Okay,
so all teachers would get a pay rise at the same time, or all of your class costs would go up at the same time. And so they're another example of a volatile item, but in a different context. And so the RBA is interested in saying, okay, well, without all these things that are really quite volatile, high moving parts, we take these things out and get a more trimmed perspective of CPI, where is our trajectory over the medium term? And so even though inflation at an all groups level is under 3% at the moment, which is within that target range, 2.8, I think it is at the moment.
I thought it was always 3 to 2. And then I heard that now they're trying to get it under 2%. Is that right?
Not necessarily. 2 to 3 is your target band. That's correct. Okay. But it's about that trimmed mean. So because the trimmed mean the core inflation is sort of mid to high 3s at the moment, they need to get that down to sub 3, which may mean that the overall inflation level does move to a low 2% level in the short term, but with a view to controlling it in that 2 to 3% range over the long run.
And so then I suppose the Reserve Bank's only got one lever, really, one main lever,
which is the interest rate.
Which is interest rates, right? The base cash rate. I know we've got a lot of clients who are saying to us, look, they'll wait till next year because they think there's going to be an interest rate drop and that will affect the price they get. I don't know I think there's other factors in what we do, like supply and demand. I think we've had really good trading years, so I think there's other factors. I don't know if I entirely agree, but how long, let's say we get 2 quarters of interest rate drops. Okay?
Early in the new year, which
Early
is
in the
what
new
they're sort of loosely predicting, at least they were before international influences have
Exactly. But
happened. But let's just pretend.
let's say,
Yep.
right? How long does it then take for that to actually be passed through the economy and actually start to affect the numbers? Because I accept the confidence, right? It create confidence straight away. But do you have any idea from previous times how long it takes for the market to actually enjoy the reduction?
So the market, we're running about, well, I don't know whether we call it two different market, but the current market, it means that people already like have a mortgage, people
Yes.
already ready, like have a saving that ready to buy. So, or the supply that is currently vacant that ready for people to
Yes.
buy, that market will adjust it almost instantly because it's like that they have like current interest rate and it's dropped, they refinance, they readjust everything.
So a bit the same way where the banks, often reflect it within 24 hours. So you're saying that the market feels that immediately.
So
I guess it does. It's a real world. Yeah.
The immediate market. But the one that, the future supply, because we currently, our supply is tight, but people didn't really feel, oh, if I going to, doing the supply now, and the interest rate is still high, it's very difficult for developer as well as
Unbelievably hard.
as well as the future buyers because the interest rate is affecting both. But that market will actually going to affect it really slow because that means that there's a lot of other factors that require them to be, even though there's, okay, great, let's start. But when you say start, when you actually get the supply on the ground and those things, that
It takes time for that to
time.
really
We work with a
influence.
lot of developers. It's a 3-4 year process.
Yes.
Before, you start to see property prices moving,
Yeah.
and that's going to be the beginning of the reset of the market and the feasibility. Right, building costs have just blown out so much, it makes it unfeasible at the moment. But if property prices keep going in the direction they have, that's how the market will correct itself. Do you think, we won't hold you to it, but do you think property prices will continue to increase at the rate they have in the next couple of years?
Maybe not as fast because we got especially if we stabilize a little bit. But if the supply didn't really pick up relatively quickly, that's going to be really challenging in terms of, because everyone, I agree with a lot of people saying about the housing market at the moment is the problem is not about lack of demand and everything else, but it's actually
Supply.
the supply.
Yeah. It's interesting. I was reading the other day where in previous cycles, where we seem to be on a wait and watch stance for interest rates to come down, but that's just one or two decreases.
Yeah.
We're not talking about the trend of decreasing or the trend of the interest rates increasing. It's just talking about a singular occurrence or a couple of things. And what I read before is just because interest rates come down once or twice doesn't mean that's the direction that they're heading, right? And so how we're talking about a singular occurrence rather than the trend of which is probably a bigger thing to be talking about when you're talking about that long-term impact, right?
But I know my father always has been saying to me a lot lately that, if you look back historically, interest rates aren't that high.
That's right.
Really.
Across
And
the
certainly
30-year
not-
rolling average is that we're relatively, we're a couple of basis points above where the average has been. It's a perception-based thing.
Well, I think
right?
it's just that so many people bought things when it was just
so low, which was a black swan event really that drove interest rates so low, and people just had a few years to get very comfortable with paying really low rates on their mortgage, right?
In your
Yeah.
20 years, have you ever seen a cycle that's this extreme?
Well, obviously, there are a few, like the global financial crisis
Yep.
and more recently, COVID. It's actually very unpredictable. Where, like, people, especially developers, they don't really predict they will be doing so well straight after COVID because they thought, oh, this is not going to be good. But they actually pick up really good margin at that time. Now is coming down again.
Yes.
But so that was like
A surprise for everybody. Same for us.
Yes.
You know, I mean, I know in the first week that we shut the office, we lost 48 deals. Everything that was under contract that wasn't unconditional. It was just one call after the next. But I was amazed how quickly confidence came back through that process.
Yeah.
I think everybody was surprised.
Yes. Yeah.
And I think also everyone came out with the mentality of, you you only live once. We've been locked up.
Yes.
What are we keeping the money in the bank for? Let's go out and live our lives.
Yep.
And that's what our clients have seen.
Yes.
Right?
Yeah, 100%.
Because that I think the numbers that have been achieved for a weekend away in locations, $600 a night, $700 a night, that at places that would historically be $200.
Yep.
Yes.
But that's not really sustainable.
No.
So how does this cycle differ to the financial crisis?
So I think one big one is about the supply. I think that is probably we got a big constraint on the supply,
Yeah.
especially COVID was international sort of affected. It's not just global like affected, and we have like supply in terms of the supply chain was affected. So
Yes.
we got that material.
Which drove costs up as well.
Yes, definitely.
And as we lead into, a very important time for Southeast Queensland and Brisbane specifically, leading up to
Yeah.
the Olympics in 2032, right? This is going to become a louder topic of conversation.
Yeah, before we talk about the Olympics, I think partly during that, because the economic was we not sure, and all the governments said we need to actually invest. We build more infrastructure, and then they become the biggest competitor of the other property and labor.
The civil versus the residential and commercial market. So it's the same people working for one and the other. And if the government's paying, well, yeah.
I remember seeing Scott Hutchinson from Hutchinson's Builder talking, a few months ago now, and he was asked when is he going to start doing the next round of residential and hotel buildings. And he said for the next 2 years as a minimum, he'll be doing government infrastructure work. So that's going to be another thing that's going to slow down supply. Isn't it?
Yeah.
And so we talk about supply, we talk about interest rates, which is affected by inflation and CPI. What are some of the other market drivers that we should be looking out for as an industry that help influence where the direction things are going? We're talking about that supply being such a big thing now, which is different for other cycles. What are some of the other things that we should be looking for?
I'd say, as we've just touched on, infrastructure is a big one in terms of driving confidence and attracting interest into areas. So, Brisbane having that long-term horizon, I don't think it's a coincidence that, beyond the supply equation, that Brisbane has outperformed other areas because there's a degree of speculative investment. Yeah. Well,
beautiful one day, expensive the next. Yeah.
When you look at Brisbane's, or Queensland more broadly's 10-year infrastructure pipeline, it's in excess of $100 billion.
Wow.
And so there's a huge amount of spending. Like that could build you a high-speed rail at a federal level, that kind of money, which is a project that's been thrown around for 30 years.
30 years it's been saying. Are they doing? They're doing some testing on that
There's
now.
some early works, but again, it's it's a case study at 5 million or whatever. But I guess the point is, we as a state are spending a lot of money, investing a lot of money, as we should be, and hopefully into the right things.
But isn't there an argument that that the housing crisis is the most significant issue, right?
Yep.
Wouldn't there be some logic or some discussion being had on maybe slowing down some of those long-term things? I know what you're saying.
Yeah.
It's good for areas, it employs people, the income tax.
At an economic level,
On an economic level.
But at
there's
a
only
human
so
level,
many builders, right?
correct.
Really?
And well, the incentive there, if you're talking supply demand, insufficient labour supply is create more labour supply, and so that's what the governments are starting to do, is look at ways of how we can better train people. I know this is part of the catch-22.
Yes.
But when you talk about population growth, only 20% of population growth comes from natural increase, like birth. The other 80% is net overseas migration.
Yes.
And so obviously there's always that question of where do we house?
Australia has been built.
On the backbone of immigration.
Absolutely. I'm one.
Yep.
Proudly.
What are your predictions for the next 1 to 2 years as far as the influences that are going to affect us in the biggest way?
I think we can see at an accommodation level that ADR's run out of steam compared to 18 months ago. There was a really strong increase.
Absolutely.
So I think that will taper, but limited supply should see us continue to lift our occupancies, which will help on that RevPAR level, so help with profitability overall. And that's probably a 1 to 2 year expectation. And then from there, we might start to see new delivered stock come into the market. A lot of newly delivered stock is on a year-on-year basis slowing down. And so, again, just getting back into that development cycle. So potentially even over 3 to 4 years, you might see that trend, particularly as stock's coming offline, when we're seeing deconversion of a lot of properties.
Yep.
We are seeing the odd case of the opposite. So in Canberra, Veriu has just opened a hotel that was an office building.
Yes.
But that's kind of the exception. Most things are going the other. We've seen 3-4 assets in the last 12 months in Spring Hill deconvert from hotels, motels into accommodation.
And being bought by the government or leased by the government for housing. I don't often disagree with you, but I actually think that ADR is going to stay strong.
Okay.
I actually think it will be occupancy that will soften because people have spent so much and they don't have as much discretionary money. What I hope is that our clients do hold ADR because the profit's in the ADR. But you're right, there is a habit that once they start seeing occupancy drop, they try and buy the business. But with costs going up, there's an argument that you're better running at 70% at a higher ADR than you are at 90 at a lower, because of base cost, wages, wear and tear.
When I say slow, I just mean growth, sorry, not actually negative movement in ADR.
Salesperson.
We could talk about this all day, right? But we're going to have to wrap it up here. But what we might do is come bring you guys back for another episode.
Because we didn't even touch
on some of it, yes. Thank you very much for lending your time and expertise to our little conversation about the wider economic impact of the economics into the property and accommodation industry.
I understand inflation a little bit better.
Yes, a little bit for sure, absolutely. Thank you for bringing us. Connie, thank you for joining us and giving up your time. Josh, we're going to keep taking your time and getting you to help us influence this as much as we can. But thank you very much for joining us at Checked In with Resort Brokers. Thank you.
Thank you.
Thank you so much for joining us on Checked In with Resort Brokers. If you enjoyed the insights from this episode, we'd love your support with a 5-star review on Apple Podcasts and Spotify.
And don't forget to hit subscribe on your favourite platform and stay connected with us on social media at Resort Brokers.
We're excited to continue this amazing journey with you. See you on the next episode.